As a barcode from Overcome Mortgages. If you're looking for a buy-to-let mortgage in today's economic climate, it's completely understandable if the whole thing feels a little daunting. So as a landlord, especially if you're remortgaging, you may be facing higher mortgage rates, higher monthly payments, and a tighter squeeze on your profits. But the good news is you don't have to navigate any of this alone. Experienced advisors can help you make sense of the market, compare your options, source a buy-to-let mortgage that genuinely works for you. So as a mortgage broker myself, I understand some of the key concepts that lenders rely on. So one of these is the interest cover ratio. So when lenders assess a buy-to-let application, they look at several things. So they look at your rental income, the type and value of the property, your personal income, and your credit history. They use all of this to calculate your ICR. Short. Think of it as a safety net, a way for lenders to check that the rent you receive comfortably covers your mortgage payments. The ICR is a regulatory requirement set by the Prudential Regulatory Authority. It's part of the basic affordability checks applied to most buy-to-let mortgages. Lenders don't just want your rent to cover the mortgage, they want a buffer, usually around 25%, based on a higher stressed interest rate. For example, a typical requirement might be that your property achieves rent worth at least 125% of the mortgage payments at a notional interest rate. In that case, the ICR is 125%. Most lenders look for a minimum ICR of 125%, but this can vary depending on the stress rate they apply. They are also considering the real-world costs you face as a landlord, interest rates, tax, and property maintenance. So if the expected rental yield doesn't exceed the notional interest rate by enough, lenders may look at your other income to help assess affordability. And if you're a higher rate taxpayer, you may be assessed against a higher stressed ICR, often around 145%, because your tax burden is greater. So what can you do if rising inflation or higher rates are putting pressure on your plans? An advisor can walk you through several options, including passing on some of your mortgage costs, extending your mortgage term for repayment mortgages, or increasing borrowing on another property if you have a portfolio. When it comes to finding the right buy-to-let mortgage, brokers combine expertise with powerful search tools to match you with a lender whose criteria, including the ICR, fit your situation. So if you're ready to take that step, you can book an appointment with ourselves, get in touch using our contact details. And remember, your property may be repossessed if you do not keep up repayments on your mortgage. Most buy-to-let mortgages are not regulated by the Financial Conduct Authority. The content for this post was approved by the Openwork Partnership on the 10th of January 2025.